Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Adiba binti Muhammad Zain. We would like to share about the difference between Islamic financial system and conventional financial system. What is Islamic finance? Islamic finance is financial system that operate according to Islamic law, which is called Sharia and Sharia compliant. Islamic finance just seems like conventional, which is they have bank, capital market, fund manager, insurance companies, and also Islamic investment fund. But the difference is just Islamic finance is operate according to the Islamic law.
Assalamualaikum. My name is Nur Shazana binti Zainwa, and I will explain about the value proposition in Islamic finance. The strength in Islamic finance are derived from the principle of Sharia that required financial transaction be accompanied by underlying productive economic activity, and this will be resulting in a close link between the financial and productive flows. Fundamental to Islamic finance is the profit and risk sharing, which the system will require an effort to get the profit that match with the risk they give. As Islamic finance develop to meet the changing requirements of businesses and consumers, and innovation is integral to development of the new Islamic financial product and service. In Islamic finance, innovation must be tested against the objective of Sharia, where the primary objective is the realization of benefit to the people. Indeed, Sharia-based innovation brings a Sharia compliance culture in Islamic financial institutions that serve to ensure that the product development process incorporate ethical value proposition.
Assalamualaikum and hi, my name is Aina Anizah binti Kamar Nizam. I'm going to talk about the difference in structure of Islamic financial system and conventional financial system. So Islamic financial system sees real asset as the product and money is just a medium of exchange. The profit on the exchange of goods and services is the basis of earning point, while conventional financial system sees money as the profit besides of medium of exchange or store of value. And the time value is the basis for changing in interest on capital, Other than that, Islamic financial system share loss if the organization suffered loss, but conventional financial system charge interest in case the organization suffered loss. The SWOT analysis of Islamic financial system is, for strength, the system have a principle of Sharia, and people have the positive attitude that Islamic banks are, and based on equity, justice, and ethics. So weaknesses of Islamic financial system is the limited availability of human resources with Islamic banking knowledge. The opportunity of Islamic financial system is the growing local and international in Islamic banking market, and the increasing on awareness on Islamic financial services and the demands on Sharia compliant product and services. The threat of Islamic financial system is the macroeconomic challenges and when conventional started to enter the Islamic banking market.
Next is operational mechanism in Islamic financial system. There is a lot of operation mechanism in Islamic finance, and one of them is sources of fund. For sources of fund, they have two types, which is deposit fund and another one investment fund. In deposit fund, they have three another type, which is current deposit, saving deposit, and term deposit. For the current deposit and term deposit, they have Wadiyah Al-Amanah and Kad Al-Hasad. But for term deposit, they have Community of Murabahah and Mudarabah. Next is investment fund. For investment fund, they have unrestricted investment and restricted investment. These two have mudarabah, wakalah and musyarakah. As example of deposit account in Islamic banking, for mudarabah deposit, the customer who act as a owner places his money with the bank who will manage their fund. The distribution of profit between the bank and the depositor is based on mutually agreed sharing ratio. This must be agreed by both parties at the time opening the account. While for conventional, when you deposit your money, it is customary to expect a small interest based on the amount you deposit. But for Islamic, you will get profit sharing rather than interest.
Hi, Assalamualaikum. I am Nur Farazakina. I am here to tell about the differences between Islamic and conventional instruments. There are few differences between Islamic and conventional instruments offered by CIMB Bank. For Islamic, the instruments offered are Commodity Murabaha Deposit. A commodity murabaha deposit is a base treasury deposit product that allows customers to lock in an upfront fixed Malaysian ringgit or foreign currency profit rate. Customers appoint CIMB Islamic as wakil, that is agent, to purchase and to sell commodities to facilitate the deposit transaction. The second instrument is Islamic negotiable instruments. Islamic negotiable instruments covers two instruments that are negotiable Islamic debt certificate, that is a buy bitaman ajil based investment product in which investors obtain a certificate evidencing that a certain amount of money has been deposited with the issuing bank at an agreed Malaysia ringgit profit rate and is payable at a specific future date. The certificate can easily be liquidated to raise cash before maturity date. The second Islamic negotiable instruments is Islamic negotiable instruments of deposit, that is a mudarabah-based investment product in which investor obtain a certificate evidencing that a certain amount of money has been deposited with the issuing bank at an agreed Malaysia ringgit profit sharing ratio and is payable at a specific future date. A certificate can easily be liquidated to raise cash before maturity date. Upon maturity date, the actual dividend shall be declared based upon the issuing bank's rate of return. The third instrument is Bank Negara Monetary Notes, that is a form of Islamic securities issued by Bank Negara Malaysia for the purpose of managing liquidity in the Islamic financial market. New insurance can be issued either on a discounted or coupon-bearing basis, depending on investors' demand. Last instrument is Malaysia Islamic Treasury Bills, that is a form of Islamic securities issued by Bank Negara Malaysia on behalf of the Government of Malaysia on a discount basis.
Assalamualaikum, my name is Karisa Daini. Previously, Farah has explained about Islamic instruments for CIMB Bank. Now I'm going to continue other type of instruments that is more focusing on conventional instruments offered by CIMB to the clients. So what is conventional instruments that CIMB has prepared? Some of the common conventional features by the bank are money market repo, short-term money market deposits, short-term securities, and negotiable instruments of deposit (NID). I will define on money market repo and short-term securities. Money market repo, or called repurchase agreement, is an alternative investment option for clients that have surplus funds. It's a transaction in which a borrower agrees to sell securities to a lender with an agreement to repurchase the securities, including interest at an agreed upon rate at a fixed date at a given price. Normally, the shortest repo purchase tenor is within 1 day, while the longer period is less than 2 weeks. Besides, our clients' funds are secured against underlying securities, not the short-term securities. Short-term securities consist of Malaysian government treasury bills, Bank Negara monetary notes, Islamic treasury bills, and other short-term papers that subject to paper availability in the bank and the market. Malaysian government treasury bills are short-term obligations by a government and become the most preferable treasury bills because of their safety, short-term maturity, and marketability. Other than that, this short-term security is sold at a discount of their face value, and successful yield of this issue is a benchmark for the short-term interest rate. Usually, treasury bills maturity is within 3 to 12 months. That's all.
Lastly, for the conclusion is, of course, this would not be simple to implement. The fundamental differences between of Islamic finance and conventional finance is that Islamic finance does not put a cost on the money. Islamic finance promotes a transaction that have high degree of transparency in order to preserve the rights of involved parties. It is important to ensure that regulatory and supervisory framework consistent with global financial reforms, especially in the context of Islamic finance, increasingly become the mainstream and integrated the global financial system.